Peer-to-peer banking is an exciting new innovation which is rapidly gaining traction and has the potential to change finance as we know it. And peer-to-peer banking with Bitcoin is even more of an innovation. To understand how it works, we must first clarify that it is completely different than modern banking. And it really doesn't resemble the word bank as most people understand it. See, traditional banks are not transparent and act as a black box where depositors store their money. Depositors do this mainly to make their money digital and easier to use, as well as for the security of their funds. Depositors sometimes earn interest on their deposits, but it's not very often, and the rate is very low if they do. The bank then uses their deposits and gives it out as loans to other borrowers, mostly unknown to the depositor. They even expand the deposit, creating the money out of thin air using what's called the fractional reserve banking system. The bank then makes money by collecting the interest as those loans are repaid. Bitcoin changes the model completely. For borrowers, Bitcoin is sound money and cannot be created out of thin air. So every Satoshi borrowed comes directly from another Bitcoin owner. Bitcoin is also already digital and secure, so the only real remaining function needed from banks is lending and earning interest. And because of Bitcoin's nature, getting deposits for Bitcoin loans is a bit harder. Depositors are simply not going to be parting with their Bitcoin for someone else to spend behind closed doors. This is where peer-to-peer banking at BTC Pop comes in. BTC Pop is a platform, not a bank, that brings together borrowers and lenders and provides each with tools to successfully enable borrowing and earning interest with Bitcoin. This is how it works. Borrowers, after they verified their identity, can create loan offerings and publish them out to investors. Depositors, in this case, act more as investors, and they freely hold their Bitcoin and only choose to invest and earn interest on the loans that they want to. As peer-to-peer lending is known to be risky, investors don't easily part with their funds. At BTC Pop, borrowers are able to make their loan offerings more appealing by offering lenders insurance and collateral for their loans. Collateral is fully digital and comes in the form of altcoins such as Ethereum or peer-to-peer shares from BTC Pop's share market. This collateral is held by BTC Pop until the borrower loan obligations are met. In the case of default, altcoins and shares are liquidated by BTC Pop and used to pay back the lenders. So lenders can now confidently invest their Bitcoin in peer-to-peer loans with collateral, and earn a healthy return doing so. Also, because there really isn't a middleman, the borrower benefits as well, as the borrower can receive the lowest interest rate the market will give. So if you're ready to participate in this new peer-to-peer finance, head on over to btcpop.co today and sign up.